Okay, what is going on, everybody on YouTube? Griffin here, coming back to you guys with another video from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, if you're new to the channel and going to be tuning in for the first time, definitely consider hitting that subscribe button below. It's been a while since we've posted again, and I definitely wanted to give you all some sort of update. Hopefully, make sure we're going live. Yeah, we are live now. So I wanted to give you guys just an overall update and give you all just a review, essentially, of just a little bit of like positives and negatives now that I've been using M1 Finance now for close to 3 months, about 2.5 months now. My first contribution was right around September 11th, September 12th. And as you can see right now, it's showing that like my value is $1.50. I do have right around $509 in there. As you can see, we're up $9.40 to date with a 4.3% return on our total investment since day one. So just to give you all a quick update, I've made quite a big adjustment actually to like the different types of funds and stocks and everything like that we are in. So I'll just go over those real quick. We're now in this Fidelity Information Technology Index. The reason that I like this one is because apparently it's only going to show my return for some reason, which is actually one of the positives and negatives that I'll get into here in a minute. But overall, this stock fund ETF is up literally like 27%, something ridiculous to date. And I went back and looked at the 5-year pattern. It's still doing very well as well. Pretty much since inception, it's doing very well, like 14%, something like that, annualized return. We're still in the utilities, and you can see like my actual versus target, which I mean we literally only have $1.50 in right now, and I'll explain why I have like nothing in right now in just a second. But you can see my target for that is 12%, 10, and then it obviously gets lower and lower. So we have 12% going into that, 10% going into the utilities index. And then the growth ETF, we got 10. We also have a just standard Vanguard S&P 500 ETF as well. Get you guys pulled up here. The S&P 500 ETF, we have a high dividend yield. We got a little bit going into, and you can see these are my overall returns on everything since getting in. A lot more green than red, which is of course a good thing. The one that sticks out like a sore thumb, of course, is Apple. We only have 3% of the money going in simply because I don't want to take a lot of risk with single stocks necessarily. 3% is still quite a bit going into a single stock exposure. This is more of my longer term kind of a bridge account, so to speak, because obviously when you retire, you can't pull out a 401ks, anything like that, until 59 and a half, 60 years old. I don't know about you guys. I don't plan on really working necessarily that long, for sure not full time, unless if it's my own businesses, that kind of thing. So I want to have some sort of a bridge account, bridge retirement account. They refer to it as a bridge account, of course, because it bridges you essentially from, say you want to retire at 45, well then you need enough money to survive from 45 to 59 and a half. So that's essentially what this account here is. So I want you guys to keep that in mind too, because if you're not using it necessarily as a bridge account, then of course feel free to take way more risk than I am. But as you can see, I mean, I'm heavy on my funds. I mean, we got 5 to 12% in a lot of these funds. We have QQQ, all that, of course. This NASDAQ composite one, if I remember right, is another one. Fidelity has really good funds, I noticed too. Fidelity, and then of course Vanguard has some of the lowest fees as well, but the Fidelity ones are really good. If your work actually uses, like, if your job's 401k uses Fidelity and has a bunch of like Fidelity mutual funds and stuff like that, I would definitely suggest you dive into those and take a look, because there are a bunch in there that are doing over the last like 5 years like 18 to 30%. I mean, crazy returns. Obviously the market's been up a lot since Trump got elected, but even if you go back to the inception date of like 80s, 90s, they're up on average like 12 to 15% a year annualized, which is a very good rate of return. The market only averages about 8 to 10%. Some say 7. Those are, I don't know where they're getting their numbers from, but from what I've seen, the market averages around 8 to 10% a year after all the down years, all that good stuff. So something to keep in mind for your 401ks, by the way. But like I said, we're pretty much heavy funds, and then we got Apple, 3% in Apple, because I am very, very confident in Apple, where Apple's going. I honestly plan on getting back in. Overall in the market, of course, but plan on hopping back in Apple very soon. I expect for it to come down quite a bit along with the overall market, and that is actually why we are pretty much out of everything. I mean, I said a sell to sell everything, but whenever you sell on M1 Finance, you don't tend to really get 100% fill. $1.50, whatever, not a big deal in my opinion. We're talking pennies per investment. Nothing's really going to happen at the end of the day. But to just get into the whole point of the video, essentially, after this long intro for you guys, I just want to give all you an update, because I know it's been about a month since we've posted last. This is everything that I would be in if you want to just take screenshots or whatever and take a look for yourself. But to the whole point, positive negatives of M1 Finance. So positives, very, very, very easy to get into stocks, funds, things like that you maybe not have able to get into with, say, Robinhood, or simply with a low account balance. You all can see I only have $500 invested right now. If you include the $150, about $509. $940 of that, of course, is profit. But overall, I've only put in $500. So say I had $500 and I wanted to go invest into a Chipotle, for example. Well, if you look at Chipotle, it's over $700 per share. So if you're going over to someplace like Robinhood, or even a TD Ameritrade, Charles Schwab, E-Trade, whatever you want to use, you have to have enough money to buy a whole stock. And that's the beauty of M1 Finance, is you don't have to have the money essentially to get in there. With M1 Finance, for a lot of you that are totally new to M1 Finance, pretty much what happens is say you got your $500 here, and you decide to go ahead and buy into the market overall, like your slices is what they refer to all these stocks and ETFs, all that as. What you do is you go and pick out your favorite stocks, favorite companies, funds, all that good stuff, and you decide how much percent of every dollar you want to be invested into these companies, these funds, etc. So like Apple at 3%, for example. That means every dollar that I put into this account, so $500, for example, if I put all $500 into my pie, essentially, from what they call it, I'll just call it my retirement fund or bridge account fund, whatever. Every dollar that I put into this, 3 pennies of that is going to go into Apple. So $100, $3 is going to go in. $500 in my case, $15 essentially is what would go into Apple. So I mean, obviously, if you were to invest solely in Apple, I would have had a huge return, over 18%. We're still up 4.3 in about a month or 2 months now, just over 2 months. So I mean, that's not bad in my opinion. About 2% a month. That'd be a rate of 24% on the year, for a whole year if we kept up at that rate. But I love the fact that, like, you do not have to have the exact amount of money per share, essentially, because again, if we go over and look at Apple, it's like a $260 stock right now, $262. So originally you'd have to put in $262 to get into Apple, and then I mean, you're putting a lot at risk. For a lot of people starting out with very little money, you're essentially going to be putting all your capital at risk, hoping that Apple, or hoping that Amazon, Facebook, Chipotle, any of those, you're pretty much putting your sole faith in just one company, where with M1 Finance you can literally just deviate it out. So that way, which is what I like to do. You guys can see here I have I forget how many funds exactly when you include stocks and everything. I think it's 24 or 25 different funds and stocks here. So I mean, even if like Starbucks was down like 8% roughly, at one point it was 12%, it was down when we were invested. It came back up, still ended up down about 6% when we sold out of everything, but we had things like Apple pulling us up, the Vanguard Industrials, Vanguard S&P 500. I believe Vanguard Growth is doing pretty good. Like, as long as you have a good balance at the end of the day, you don't have to worry about putting a bunch of money at risk. So it's a lot easier to manage risk reward. Whereas on like Robinhood, all that other stuff, you have to literally put all your money. In a lot of cases, now for people investing with thousands of dollars, it's a little bit different, but most of us on here on YouTube are starting out with a small amount. We're just getting started, trying to figure out what investing is, how to get around like all the BS fees that come with investing in the market, which is changing day by day. Of course, TD Ameritrade, all these big platforms now have made online trades free. which is a game changer. We knew it was coming at some point, but they're definitely late behind the ball on that. But just the whole point is for people that are starting out with very little money. I mean, we're talking pretty much anyone starting out with $100,000 or less. I think M1 Finance is definitely good in that aspect that you can get into $100, $2,000, $1,500 stocks with literally pennies if you decide to. Not like Amazon, we got 2%, so that means $2 out of every 100 is going into Amazon. So for us, it'd be like $10 going into Amazon essentially. And it doesn't seem like a lot, but I mean, guys, the more you continue to contribute, like us, we're investing $100 to $200, sometimes $300 a month now into this account. You just do that every single month and see your money continue to grow, continue to grow, continue to grow, and that $10 will turn into $1,000, turn into $2, and it'll just continue to compound. Because what you're not taking into account also is you get dividends from certain stocks, certain ETFs, all that good stuff. So there's a whole lot that goes into it, but when you're starting out with a small amount, you can't think about making a big amount of money. Like, I mean, $9.40 obviously isn't a lot, but what you have to consider is your percent that you're up overall. So keep that in mind. So that's a major positive, and honestly, that is the main positive in my opinion when it comes to M1 Finance. And so now we'll kind of get into the negatives. So I'll say straight up, I mean, I love M1 Finance. I mean, I've been using them for a little bit now, a couple months, almost a whole quarter. But there definitely are some negatives. So we'll get into that. So pretty much the positive is literally, it is by far probably the best platform in my opinion for people starting with less than $100,000, which is most of us when we're starting our investing journey, of course. Which I should say up front, if you know me, you know that I suggest first you should at least do your company match. If your company that you work at has a 401k, a Roth 401k, whatever the case they have, if they have some sort of match, take the match first. I mean, you're essentially doubling your money right off the bat, 100% return every time you put money into that. So definitely take that first before investing any money into other like bridge accounts, anything like that. I cannot stress that enough. Even though I don't necessarily like the 401k model with the whole got to be 59.5, take out of it, At the end of the day, you're still essentially doubling your money every time you put into it. And I'm not saying you have to do 10%, 15, but say your company matches 3%, which tends to be the average. Mine is 6, but if yours is 3, 5, whatever, just at least do the company match and then use your money to go invest somewhere else. Just wanted to make that clear, of course. Make sure we're doing okay over here. We seem to be doing okay, and if we have any issues with the stream, definitely feel free to let me know. But now we'll just hop into the negatives. So first things first with the negatives, like I said, you go to submit a buy or submit a sell, you never really get filled 100%. You'll get 99% filled. So like this, for example, I have $1.49 still in the market. No big deal. I don't really care. It's going to go up or down by about 1 to 5 pennies a day, essentially, depending on how much the market swings. Not going to make or break my account at the end of the day, of course. But it's just kind of frustrating that, like, just imagine if you're investing with $500,000 or $1 million and they leave out roughly, what would this be, about 1/4%? 1/4% on $1 million is going to be a lot more than 1/4% on $510 or $1,000. So that goes back to my point where if you're investing with less than $100,000, I think M1 Finance is great. But once you start getting over $100,000, $500,000, $1 million in the future, of course, you might want to go elsewhere than M1 Finance. Of course, I'm sure you guys know that. But that part can be frustrating, especially on the buy side. Whenever you buy in, which I learned what rebalancing was. So what happens is, say you, like right now, my actual versus target. So actual is 19% right now, where the target is 12. Actual 18%, target 10, etc. So whenever you're like investing money in, the numbers, like your actual, is going to vary a lot. They try to keep it close to your target, but I mean, as you can see, it's off 7.5%, 8%. 5.5. I mean, it's almost never, like, this is about the closest you really get, is about 0.5%, unless you go over here to the rebalance. If you go through the rebalance, they will literally essentially get it almost pinpoint right on the dot. But then it usually takes 1 or 2 trading sessions for all that to play out. So it can be kind of a process, and for someone that's a micromanager like myself, where I want to be able to see every trade get executed, it can be very kind of frustrating to kind of see how all that plays out and not really know what's happening behind the scenes, which goes into another negative, which is unless if you literally dive into your activity, like you can see here, it'll just say 25 cells, but it's not really telling me, like, if I want to go in here, like, it just shows value. If I want to figure out like where I got filled, if I got filled at a good price, anything like that, I have to literally go through here just one by one and essentially check, okay, what was the high of the day? Because when you submit an order, guys, it doesn't execute immediately. So say tomorrow I go and decide, you know what, the market's down big, it's down 2-3%, I'm gonna go ahead and buy the dip. Well, not so fast, because if you submit a buy on M1 Finance even during trading sessions, it's not going to get filled until the next trading session, usually by around lunchtime the next day, from what I've noticed. So that can be kind of frustrating, because if the market's having, like I said, we all know that the market has those days where it just hiccups and drops 2-4% for literally no reason other than just some BS news headline. It makes it a little harder to buy the dip. You're going to have to kind of hope that in the morning the market hasn't already jumped up 1-2%, or because we know what happens. It's a yo-yo at the end of the day. If we have a 2-4% drop, chances are we're going to have a 1-2% pop the next day. So you're kind of essentially hoping that your timing's going to be right and that M1 Finance is going to get it filled at a good price. So again, for a micromanager like myself, when it comes to investing, it can make it a little bit difficult with the timing aspect. But at the end of the day, we have to remember that these are not like trading accounts, so to speak. They're more longer term. As you can see, I label mine 2045 as the target exit. I'll be 8 years old, something like that, was my target retirement age. So, I mean, you got to think at the end of the day, this is still long term, even though it could cost you about 0.5% to a percentage point up front. As long as you get in at a good, decent price and you hold that for a few months, it's not even going to matter too much at the end of the day. But it is just frustrating because, again, if you're trading with 100, 200, 500, or $1 million, 0.5% can make a world of difference, obviously, from a dollar standpoint, and especially dollar cost average, of course. So, those 2-3 things that I mentioned are by far the negatives. Other than that, I mean, there's not really a whole lot of negatives. It's a super easy platform. Another thing that I like a lot is they have this research tab over here, and they just have so many different like news articles and actually good articles that you can dive into. For example, like you can actually say you're interested in Amazon, just as an example, and go over here to Amazon, and we can just take a look overall. We can pull up a 5-year chart, which of course when it comes to charting, you guys know that I like to use the TD Ameritrade Thinkorswim platform for the most part. So I wouldn't necessarily use M1 Finance because I don't like using just 5-year charts. I like going out as much as 10 to 20 years just because I want to see what all has happened. I mean, this is crazy though. 424% in 5 years. I mean, that's nuts. Reason why I think that we are pretty well topped out in the technology sector, which is why I'm completely out. I think technology is in the process of rolling over. You can see the double top right here in Amazon alone. I think we have the same thing with QQQ. Get it pulled up here. Go out to 5 years. Not quite, because QQQ, it doesn't necessarily follow like obviously just Amazon or anything like that, but I mean, you can see clearly in this Amazon, pretty big double top here right at $2,000. I look for Amazon to continue down, probably somewhere around $1,500, maybe even retest that December low. But if this the only way this happens, guys, is if we have some huge correction again. I'm not trying to get too much into analyzing or anything like that. I wanted to show you guys just overall, like, if you're researching Amazon, you'll see here they kind of have just a profile telling you what Amazon's about, all that good stuff, a little bit of the finances, not a whole lot. It'll tell you, like, how many employees they have, what market they're on, and then, of course, you have all of the articles that you can look at and just get a whole bunch of different points of view. I don't really look at Motley Fool too much personally because, I mean, it's in the name there. Fool, don't go by. monthly fools when it comes to investing per se. But you can definitely get a whole bunch of different just points of view, different analysts, of course. But what I use the research tab for a lot is whenever I am like looking up different funds for the most part personally. So like what I did was I went over here, let's type in FTEC, which is that Fidelity fund. So we'll go over here, FTEC. So we can see here over the last 5 years, that one is also up 119, almost 120%. So I mean, that, again, like I said, over the last 5 years, that's up literally over what, close to 25% per year over the last 5 years. And again, guys, the reason that I'm out of almost everything is because we've had just this parabolic move to the upside as of late. I think $70 is going to be the top of the range for this specifically. Obviously, it's going to vary per fund and everything, but I think we're definitely getting near our next little top. I look for us for this fund specifically, retrace probably to around that $64, maybe $65 range, which you're not talking a huge drop. Maybe 2%, something like that. But definitely need some sort of a pullback for sure within a lot of these funds, stocks, all that good stuff. And that was pretty much what I was looking at. I like the fact that there's very little cash allocated, and then U.S. stock is very, very heavy, which is what I liked as well. And then, of course, one of my favorite things about this is you don't have to necessarily like dive into like Google and find out what does it hold the most of. It'll tell you right here, top holdings, Microsoft, check, Apple, check. I love both of the companies, and it made me confident in this fund. And they also have a small little dividend, 1%. So if worse comes to worse, you're still going to collect a little money every year. So those are the things that I really like. And like I said, negatives, the main thing is just if you're a micromanager, you're used to kind of more of a trading style like me, it can make it a little frustrating. But at the end of the day, like I said, we just got to think more longer term. We got to know that as long as we're keeping up with just the business news, business cycle, all that good stuff overall, that we're buying in at a good time. And at the end of the day, like I said, I mean, I was up 4.3%. I was up 4.5%, but like I said, we can't control where they cover it at the end of the day. 0.2%, it's not going to make a world of difference, but that is why I can't stress it enough. If you're investing with like definitely over $500,000, I wouldn't necessarily suggest going with M1 Finance, but I doubt here that a lot of people are investing with $500,000. I know most of you guys are just starting out, so I definitely give, out of a scale of 1 to 10, I would give M1 Finance probably a solid 7.5 to 8 for sure. Which compared to Robinhood, I would give Robinhood a solid 4 or 5. So I definitely like M1 Finance much more than Robinhood. I would like if at some point they introduce like options or something within M1 Finance. I know they probably won't do anything like actual trading, like weekly options or anything like that, but if they could implement some sort of like monthly options or quarterly options, something that could just throw options into your like your fund essentially, I think that would bump it up probably to a 9 in my opinion, because that'd be pretty awesome. But overall, I mean, I like the platform. I wish they would add a few more different funds, especially Fidelity funds specifically. They don't really have a lot of Fidelity funds. They are very, very heavy Vanguard on M1 Finance, and I do wish they would add some more Fidelity funds, but we'll see what happens there. But overall, I'm happy with M1 Finance so far. If I remember right, there might be a link in the description box of this video. If not, I'll make sure to put it there once it uploads. If you join and you fund your account with like $100 or something within the first 90 days or something like that, they'll give you a free $10. So that's a 10% return on your money right out of the gate. I'm not like sponsored by M1 Finance or anything. It's just one of those referral things they got going on. So if you're not already signed up for M1 Finance, definitely check it out. I'm not gonna like pressure you guys into doing it or nothing. Just check it out, see if you like it. Like I said, I've liked it so far. I've been using it for about 3 months, 2.5 to 3 months now, and it has been pretty well. So like I said, hopefully you guys did enjoy the video. If you did, definitely make sure to smash that thumbs up button. I greatly appreciate that, of course. And feel free to share this with any friends, family, coworkers, anyone that's looking to just maybe look into a bridge account. And I'll probably dive into that in a future stream here very soon. Just kind of what is a bridge account, why I think everybody should have a bridge account, and when should you start investing into a bridge account, bridge retirement account, as well. So that's pretty much it for this video, guys. Like I said, hopefully you guys did enjoy it. If you did, smash that thumbs up button and let me know in the comments what you think about M1 Finance if you're already in it. And if you're not, if you have any questions or anything, be sure to leave them in the comments below after the video uploads. And as always, if you haven't already, definitely make sure to smash that subscribe button below and hit the bell icon. That way you will be notified every time we go live or upload another video. But until next time, guys, keep on going out there, making your profits, covering your profits, and achieving some financial freedom this year. And I will see you guys in the next stream very soon. Take it easy, guys.